slide to thank them. And then if you guys can log off with your screens, that would be good. Okay.
All right. All right. I'm going to mute myself and I'm going to go live.
And I'll wait a few minutes. I'll wait a few minutes before I'll wait a minute or two. Let people load up.
You can probably
sponsor slide to thank them.
Yeah.
And then if you guys can log off with your.
I think we're live. We're saying hi to everybody out there.
I'm about to. Yeah, I'm about to. I'm just waiting to see if people are loading up.
All right.
Okay. I'm going to start in. Good afternoon, everyone. I'm Mike Togley, and thank you for being here today to join us for NEPA's Town Hall webinar. This webinar series focuses on the impact the COVID-19 crisis has had on the equipment finance industry and features NEPA members from various parts of the industry. Before we begin today's program, I'd like to thank our sponsors, so bear with me a moment as I do a share screen. Today's platinum sponsor is IDS Asset Finance Technology, and our event sponsors are Blockbox, Great American Insurance Group, and LeasePath. I'd like to thank them all for being sponsors today, and as IDS is our platinum sponsor, I have a few words to say about IDS today. In addition to being our sponsor for the NEPA Town Hall event today, IDS is also providing additional free resources and tools to help you navigate these challenging times and grow your asset finance business. To learn more about this, please visit www.idsgrp.com/explore-IDS-Cloud. IDS Cloud was designed to take the worry out of system management and let you focus on building your business. IDS Cloud is a 100% scalable SaaS solution where you get the leading functionality of InfoLease, but only pay for what you use. All you need is an internet connection to have access to the equipment finance industry's leading origination and portfolio management solution. To learn more, please visit idsgrp.com. And with that, we're going to start right in. Today's topic is about collections and repossessions. Our webinar is going to be focused on this. Since the COVID-19 crisis began earlier this year, many equipment finance companies have been facing some very unique challenges. Some of those challenges are involving the collections and repossession side of the business. And this webinar is going to focus on the best practices in collecting accounts in this unpredictable environment. And additionally, our panelists will discuss some of the difficulties and issues that they're experiencing in the repossession of equipment while businesses are closed or partially closed. To discuss today's topic, I'd like to welcome our panelists. We have with us today Sean Smith, the CEO of Dedicated Commercial Recovery, Michael Smith, President and CEO of RTR Services, and Jeremy Vang, the officer of Recovery Solutions, LLC. Thanks all for being here today, gentlemen.
Thank you for having us, Michael.
My pleasure. I'll begin by asking a few questions of each of our panelists to provide their insights. And at the end of the webinar, we'll have a brief Q&A session where the attendees that are here today can submit questions via the chat feature on the webinar. Additionally, if I can ask everybody to please remain on the webinar after the close of the Q&A session and thanking of the sponsors, as we're going to have a few words from Darren Lisi, our president, and as well as Chad Sluss, our new executive director. So with that being the case, I'm going to start right in with some questions for everybody today. First thing I'd like to cover today is what's happening in collections a bit. I'm wondering if who could describe for me some of the best practices in collecting accounts in the current environment, and if these collections practices have changed much over the past 6 or 7 months since the COVID-19 crisis began. With that, maybe I'll start with Sean Smith on this one.
Thanks. So hopefully I'm starting out not on mute. So can everybody hear me okay? Seems to be the standard go-to on Zoom is you're talking and no one can hear you. So yeah, it's been an interesting ride. You know, practices have definitely changed for the fact that you had to adapt with the situation changing basically daily. And, you know, it really forced change. One of the things that we created right away was a state by state list to, you know, be in contact with each state, getting information from where we could just to make sure what we could do in that state. And I know Jeremy and Mike on the repossession side as well. It wasn't just with elections, but on repossessions and on legal, courts were shutting down. You know, it was just, you really had to be on top of it. One of the practices that we changed, that we increased our, not only do we do a lot of training around how we had to work with businesses that were challenged by COVID, which seemed like, you know, for us as a third party agency was like every account, but let's just say it was, you know, it was obviously a large portion. We had to ensure that our staff was really on point with how we were dealing with these people and it was appropriate. And so we increased our audit standards and actually reallocated a person to full-time auditing just to ensure, you know, that there was not any opportunity to have a poor conversation, let's just say, with a business owner in the midst of that crisis. That could be catastrophic for our brand as well as our client's brand. And it was just of the utmost importance in how we did things. We were an early adopter of shutting down all legal and all repossession nationwide in the midst of that. And then we're very cautious in reopening those things and how we did that. And really it was a case by case, state by state and client by client basis on how we did that. So, you know, from our perspective, it definitely, you know, we had to be far more empathetic. We had to really, you know, cross our T's and dot our I's with what we were doing. Really know on a state by state basis, as we still need to, because now, as you can see in Mike's background, you know, you got stuff going on in Oregon. You have, you know, different cities, California, you know, Louisiana, and, you know, it's just, it's gotten a lot more. You have to be very cautious with what's going on in the United States and what you're doing there. There's just, you can't really use a one size fits all for the nation anymore. You really have to know what's going on and what you're doing in those areas. And that's something that became, you know, usually it was like a hurricane or a flood in one spot. Now there's pockets and states everywhere that you had to be paying attention to in real time, all the time. And that's been a big change, I think, for us, as far as, you know, we're already a pretty empathetic, work with people, rapport relationship style agency, but definitely had to just know what's going on and be in contact with basically every state. So from our perspective, that was what I'd say is some best practices and some differences that are still prevalent right now.
Okay, thanks very much, Sean. Appreciate that. How about you, Mike? Anything on your end as far as some of the best practices maybe that you've had to put in place that might be a little bit different than what you've had to do in prior years? Things change a bit?
Yeah, I think I'd build off of what Sean said, that you know, you had to be much more up to date and proactive in following the laws within each given state, because they were constantly changing them. You know, whether it's Illinois that shut down recoveries like California did, or when they reopened so that you could aggressively get in there and get that equipment picked up that had been sitting for some time. But I think the general best practices really haven't changed, where, you know, when it comes to treating people with respect and trying to work out a deal to navigate the problem that you're facing, it's just a little more unique with COVID in what you have to do to work around that via extensions or reduced payments for a period of time. But as long as they're communicating in a good time or bad time, as long as they're communicating, you got a plan you're working out. The best practices really haven't changed a lot, although I think clients are much more willing to work with a lessee and keep them in the contract versus 6 months ago, where they were more apt to pick it up earlier on. And other than that, we've always maintained recoveries throughout the country during this period. None of that has slowed down at all. And but there definitely is a willingness to work with the lessees and try and keep them in the deal and get to the other side of this.
Okay,
Mike,
great. Thanks. Thanks, Mike. Go ahead, Sean. I'm sorry.
Mike, if I could just add one thing to what Mike said is that, yeah, what exactly what Mike said is you really had to be cautious on that state by state basis, but the best practices didn't change. But one of the things I think this audience might find really interesting is the difference between the 08 timeframe. I saw a lot of the banks just really trying to enforce the deal and pushing a lot to me and the third party collections recovery side that was really unnecessary, which of course was great for us at the time. I saw this time a lesson was really learned to, like he said, if they are communicating, to work with them. And it was just interesting to have gone through both of those and to see the banks and the leasing companies kind of learn their lesson through that, where they held on to a lot more, worked with people better. And for me, as someone who's really trying to push a much more positive narrative for our business and what we do and how we do it, much like Mike said, working with respect and treating people better, it was good to see. I felt like the industry as a whole did a much better job this go around than in the past. So it was just reminding me of that. It was an interesting caveat to that. It was really a vastly different experience than what I saw in the 08 crash.
Yep.
Okay, great. Appreciate that, Sean. Now, Jeremy, I know you're more on the repossession side, but is there anything that you'd like to share from what you've heard about, on the collection side that you've heard from others out there? You're less on the collection side, more on repossession. Anything you'd like to add to that? Jeremy?
Sorry, internet's kind of poor where we're located. What was the question, Michael?
The question was, I know that you're more on the repossession side
Yes, sir.
than you are on the collection side, but have you heard anything anecdotal or anything that you've seen out there that you'd like to comment on what's happening on the collection side that might be different than in the past that's leading to repossession? We're going to cover a lot more about repossession later, but is there anything you'd like to say?
Ourselves, we're more or less just the repossessors and boots on the ground.
Okay. Well, with that being the case, then what we're going to, because we're going to have plenty of questions about the repossession side of it, and that's what we'll focus on more on your end, so you can give us your insights there. I'm going to move on to question number 2, if I can, and that is, it's sort of maybe a fun question if you can share anything about this, but have there been any examples that would be a good collection scenario versus a bad collection scenario that you've experienced recently that maybe you could share about a story that maybe could be that it's an impact from COVID-19? Maybe you could start off on that one. Mike Smith, if you can start on that one by any chance.
Yeah, I think for a good example, I've seen a lot of clients where, they send us out to do door knocks and make demand. And there's a lot of businesses that we're able to contact now, either at the residence or at the business, where they're actually able to pay or work out some type of payment program that is acceptable to both parties, that has an event horizon when you're looking 2, 3, 4 months down the road, that they get back to normal full payment. And so that's something that we view as a good collection scenario, where the lessees are more apt to pay or to try and work out a deal to get to the other side of this, and the lessors are much more willing to step into that arena versus just hardlining them and picking the equipment up. For bad scenario, I think we see several clients that are, the people were delinquent before COVID. They've continued to be delinquent. They're borderline on their communication, and they continue to placate out the situation instead of pulling the trigger and pushing for repossession on somebody that is demonstrated the being consistently delinquent as a problem. So they're much more willing to work with them, when I think they should pull the trigger a little sooner on those people.
I totally understand that. How about you, Sean, on your end? Any interesting good or bad collection stories that you can think of?
Yeah, I mean, that's been heavily involved with a lot going on here, boots on the ground myself, just with how sensitive the environment is and just ensuring we're doing things right, but also putting out fires when there's issues. And one of the bad collection scenarios that we had to deal with a client had credit reported someone right going into COVID, and then sent the account to us. And that guy was very frustrated about the credit report, and COVID had shut down his, hurt his business significantly, et cetera, et cetera. That was his perspective. There's probably more to it. I wouldn't necessarily agree with him because, kind of like Mike said, there was previous issues. But with that being said, instead of de-escalating it or just, there was no reason to really, what I would call be the poster child for an issue right now in the midst of COVID. My client really, his in-house counsel responded basically was, well, pay your debt, and just the not good response, and, deal with Dedicated. Well, then it turned into, now Dedicated's the bad guy and our client's the bad guy, and you're getting threatened with lawsuits and things like that. In our situation, it was frustrating because we were just trying to collect the account. So we closed it right away. So like, yo, hands off. Sorry, we didn't create this mess. If you're not going to remove the report, and even if it was rightfully there, again, it just was not the situation from our perspective. We actually let all of our clients know in like the first week of April that we cleared every credit report for every debtor that we had. And that was not something that was asked of us to do, or anyone else who knew in the industry was doing. But again, this was unprecedented times, and it just wasn't worth it, in our opinion, for us or our company or our clients. So that was a bad scenario. One of the good scenarios was, we had a client, everybody's obviously their portfolio is challenged. They're pushing for more, and we have someone who is actually paying daily, and we're following up with them weekly, and they had went from, I think like $400 a day. They were down to like $5 a day through COVID. And we've been following up. They said, look, follow up with me weekly. As my business gets back in better shape, I'll pay what I can. And actually, I'll jump back on that first scenario, on that bad scenario. What ended up coming out of that is today we actually just posted a recommendation letter from that borrower on how we dealt with that situation. So not only did we stop any possible lawsuit action, but we actually won that person over with how we dealt with it. But back to the good scenario, what was great just to see is that, so what I noticed, and just across the board, is that by and large, for the most people, other than someone who's obviously taking advantage of the situation, still operating, whatever, people, if you followed up with them, would increase as they could. And so we just worked with someone who wrote us a review recently, and they have went from $400 a day down to $5 a day, and now they're back up to like $300 a day. And it was all just riding that wave. We're all riding the wave together. Everyone on this call, Mike, Jeremy, Nifa, everybody's been affected by this, and it was just not the time to be the jerk in the room or try to really stick it to people. It was to try to work with them, and we've just seen that scenario play out so much throughout this. And so that would be kind of a couple examples of working with people and how they didn't exactly work. It worked out well in the first scenario, but it was definitely not a non-optimal road to get there. Let's just say that. And it was because of the client's aggressive approach, which is not something that we advocate for in the least bit.
Okay, great. Thank you very much. I'm going to stay with one more collection question before I get into the repossession side of it. And that is, and this might just be a difficult question to answer, but it might be one that you could just shed a little bit light on. And that is that, how long should a company be waiting today to collect on a delinquent account in this environment? Is that different than it used to be? We've got things going on in the marketplace where people have come into liquidity issues, deferrals, things of that nature. And is there a certain period of time that you say to yourself as a standard that you should wait before you collect an account? Or is it pretty much on a case-by-case basis, and has that changed at all? And I'll Maybe I'll start with you, Mike, again on this one, if I can go there. Or actually,
Yeah.
I'll start with Sean. I think I started with Mike last time. I'll start with Sean this time. Is that so?
Okay.
Sure, no problem. So, I actually took some notes on this just for myself. Is one, every situation, it should be situation specific, in my opinion. Using a broad brush for anything we do is just not going to optimize your recovery, protect your brand. It really is situation specific. I really advocated through this with our clients, while it may not benefit dedicated as much, that they do a lot more exhausting of their efforts up front before they move to third-party collections or repossession, and make that blatantly clear. Maybe take some extra steps to just make it black and white how they went overboard trying to help this person before they made that step. And so it's very much documented. Hey, I put in 2 calls to them and sent out 1 letter, and then I repoed it. Time is it's just not that. It's not that time. And while, in some senses, the regulatory environment has loosened up a little bit in the state by state stuff, we're still really much advocating, and probably through this winter at least, to really use every situation with kid gloves. Maybe, if it's possible for your business, and we recognize, people have different setups and different scenarios, but if it's possible to be a little bit more cautious, provide a little extra time, try a little bit harder to communicate up front before you move on that step. And again, that's, for me, that's not advantageous for us, for our clients to hold on to their accounts or their repossessions, but it's just something where, again, looking at it from a long-term perspective, that's the right thing to do, from my opinion, in this environment. And there's no sense in creating extra headaches for your company over one piece of equipment or one account. It's just not worth it.
Okay, thanks, Sean. Appreciate the insights there. And how about yourself, Mike, on this one? Do you feel that there's a certain period of time you should be waiting, things have changed before you get into collection side?
Well, I think I agree with Sean in the sense that COVID, it's 100% situational, and depending upon what a lessor's, risk rate would be, or what their palette is for having accounts go delinquent. But I think, there are obviously specific industries and businesses that aren't coming back from this, and that you're better off being proactive on pursuing those, not only the collections, but also the recovery and the pursuit of deficiency while they still have assets, versus waiting until another 3 or 4 months or 5 months down the road. Anything that has to go legal is always a problem right now because of the courts and the slow of processing that, and the sympathetic judges to what's going on. But I think that anytime the communication, I think that's always been kind of a big red flag, is anytime the communication goes cold, you ought to be aggressively on that. Whether you're sending out a site inspection to be done and reestablish that line of communication, or validate what they're telling you to be the truth versus just taking their word for it, has been a great tool for clients to use and deploy in order to keep the delinquencies lower. But I think it's 100% situational to your own company's, palette.
Okay, great. Thanks, Mike. Appreciate it. So now what I'm going to do is I'm going to move a little bit into the repossession side, and I'll start on this one with Jeremy, since he's the one who's focused more on that. When you think about repossession today, when should a company, an equipment finance company or bank-owned leasing company, whatever it might be, when should they really be considering repossession? And are there any key metrics that you would recommend to the lenders out there, and say these are the metrics you should be watching before you get into a repossession situation?
I've talked to several different asset managers with clients, and everybody's answer has been the same. Look at communication. Are they in communication with you? Are they trying to give you something? If they're not communicating at all, at least get someone out there to do a field visit or a door knock to get them back in communication with the clients and inspect the assets.
And is that a situation where does that present difficulties at that point? To go in there and actually conduct the visit? Are you finding that there are difficulties when you're trying to go out and meet with people because either the business is closed or it's partially closed or people are just remote?
Sorry, I have such an unstable connection, Michael. With the business closures, there are still a lot of really responsible people out there that are communicating. They're voluntarily surrendering assets. And then there's others that are totally shutting down their doors and going ghost.
Okay. Okay, great. And how about yourself, Mike Smith? On your end of it, do you think that there's anything that you can share when somebody should, your opinion on when somebody should consider a repossession versus not going to that route yet?
Well, I think anytime a collector senses or asset management senses an elevated risk associated with the account, that's something they should seriously consider. And I would add to Jeremy's, triggers, not just lack of communication, but unwillingness to work with you to resolve the account, or stop payments, or if their credit rating drops. Those are all indicators that you got a potentially bigger problem here that needs to be worked on. And so it's always better, in my opinion, to when you identify that, to get out there in 30, 60 days to get it resolved or picked up than it is to wait 90 or 150 days. Your success rate just goes up substantially with that, being a little more proactive. But if they're communicating with you, by all means, through this period of time, you're better off trying to resolve it with a decreased payment or something to keep them in it, and give them that opportunity.
Okay, thanks, Mike. Appreciate it. How about yourself, Sean? Anything on your end from the standpoint of when repossession should be considered? Are there any triggers that you're experiencing out there and any differences in the marketplace from that perspective when you're going to go to that final step of saying, I'm going to go repossess this equipment?
Yeah, so one thing I'd just add on to dovetail on the last question that ties into this too is one thing to consider is maybe trying for rehabilitation. I know there's several companies like Dedicated out there that will try to get, bucket for paying again and, get caught up on that past due balance. But yeah, if they're ghosting you, I agree with what Mike said. The asset managers know what those indicators are. I'm definitely not advocating that you don't move on equipment, but just to make sure that it really is situational specific and not just a broad brush. I still recommend proceeding with caution and just making sure you're working with your vendors like Jeremy in the style and manner in which is imperative that you operate. That's why knowing, we have a relationship. I know Jeremy well, so does my team that works directly with him. And we work directly with Jeremy, because we're really specific with folks, one that they're taking the time like a Jeremy is to be involved in our industry, to be involved in NEFA, that really run their company with the highest standards, especially on that. And, I think back in the day, it was kind of, the one-off, try to get a better deal or that type of thing. And now I think there's more of an emphasis than ever to ensure who you're working with, especially on the repossession side. Also knowing, whether it should be considered is, have you inspected it? Do you really know the value? Have you either done a desktop valuation yourself or had an outside person do that? Have you talked to the vendor, whether it's been serviced recently or not? I mean, sometimes, the asset manager, the collection manager has been dealing with this person and some emotion gets involved and poor decisions get made to move on things that are not even in the ballpark worth the time and money invested just to get a piece of equipment or move on collections or whatever that is. So that's something to be considered, is really looking at objectively from a cost standpoint. And that was the same before it is now, but again, with people having to adjust so much of their portfolio, money matters, especially right now as we make it through this phase. There's no sense in spending good money after bad. So taking some upfront steps like trying to get an inspection or even considering more pushing voluntary, like Jeremy said. You know, if there's a way you think you can get to a voluntary surrender, try every effort to do that first. You know, and explain the benefits of that to them. Maybe wrap your communications around that as well, and the benefits of them. Explain why that's going to be better for them as well. So some things to consider, and just move quick. You know, we all been in this business long enough to know when our gut's telling us like this is a bad scenario. Like Mike was saying, move on it, get it over to one of us, and get going on it. Don't let it sit.
Yeah, because one of the things we're seeing, Mike, too, is that by the time a client reacts to it and gets us out there to repossess it, in this environment, they've already probably given them a 3-month extension and maybe another 2 or 3 months extension to that. So by the time they do react to it and get out there to repossess it, we're finding a lot of times the lessees have begin to sell off that equipment to cover their other obligations or to feed their family. And you get out there and 2/3 of your equipment's been sold off and gone forever. And you know, most people aren't in a position to ever make that up, so it suffers more of a hard loss in the long run.
And that's a good example of just truly what can happen in an economic environment such as this, where there are so many unknowns that it's not just your standard collection issue. There are personal issues going on. There are true business and sector issues that are happening out there. You know, what I'm going to do is I'm going to jump into some of the questions from our audience, if I can do that here, because we have a few here. And I'll just read the first one. It says, most of the assets that we work with require professional deinstallation and rigging. So involuntary repossessions are extremely rare. How do each of you approach turning situations with uncooperative or non-communicative debtors into cooperative repossessions and or liquidations? How do you go about doing that?
Well,
If I might, sorry, Michael. I myself, I'm the boots on the ground agent for a lot of direct and indirect clients. And a lot of times we don't have specifics on the customers, whether it's any communication. I've always
Seems like we go ahead, Jeremy, continue. We lost you for a second there.
I was just saying, I use the approach of killing people with kindness. And a lot of times we may not have any of the collection notes. We may not have, don't know if there's been any communication from the customer. And we will go in and I'd say 8 out of 10 times be able to turn an involuntary into a voluntary just by talking to the customer and granting us permission in to deinstall.
And we've ran into a few challenges of trying to line up rigging companies and technicians because they don't want to do that face-to-face meeting. And so you have to work around your vendors in that scenario also. But I agree with Jeremy. You know, most of the time when we go in a situation like that, we're able to talk to the customer and explain kind of the facts of life to them, that they don't own the equipment, they can't keep it. If they don't find some way of resolving with the client or becoming cooperative, it's only going to get worse. And a lot of times, you know, a majority of the time right now, that turns the tide with these people to either getting it resolved or voluntarily surrendering it. And then we stage up the rigging and the technicians to come in to handle the deinstall and some of it.
Sean, anything to add? Thank you, Mike. Anything to add on that?
Yeah, we're all on the same page. Look, I'm a huge advocate of voluntary surrender and just voluntary repossession and working with people. And, you know, in the question, how do you approach turning those situations into uncooperative or communicative debtors into cooperative, is adjust your communications, explain the situation, you know, approach them in a non-aggressive standpoint and say, here is the benefits of this. You know, and give them the real scenarios of that. And when you really map out the financial benefits, and, you know, maybe offer, if they work with you, offer you know, a discount, or if you're close enough on the deal, be willing to wipe away the deficiency balance in this market with, if the equipment is, if the situation, the deal is right, you know, think outside the box on those things to get that equipment back and create a voluntary. You lower your risk, you lower, you know, and increase your margin up, you know. And a lot of times if you can get a voluntary, they'll clean it up for you, they'll have it set up for you, they'll work with you. They, you know, if they feel they're getting a deal out of it, they become like the easiest person to work with when they were adversarial to start.
Most people with equipment like that don't really want to have the sheriff come out and with a court order and make that big scene and let their neighbors know that, hey, they're being repossessed and stuff. They'd rather work it out.
Yeah, that's an interesting point too, because there's that, not the embarrassment factor, but let's just keep it under a lid so that we don't have to everybody know what's going on there.
Yeah.
I have one more question that I'll ask of the group, and there might be some obvious industries that we can talk about. Let's just keep this one a little brief, but are there certain industry sectors right now that you're experiencing the highest level of collections and repossessions? And I know that you're going to tell me probably restaurants, but besides restaurants, unfortunately for those folks, are there other sectors that are experiencing the highest level? That's one of the questions we have here. And Jeremy, I could start with you on that one, on the repossession side.
For me, it would have to be forestry and
Looks like we froze up again a little bit with Jeremy. Jeremy, you said it was forestry and what else?
Forestry, transportation, and ag.
And ag, okay, all right. How about yourself, Mike Smith? Were you experiencing where are you experiencing the highest levels of collections and or repossession activity at this point?
I think in the medical field, elective procedures and equipment associated with that. Trucks and trailers and construction have been strong for the last couple years. You know, I think a little bit of an uptick in your smaller trucks and vans and equipment that, you know, everyday businesses use. You know, buses continue to be, you know, at a low point for their value and for the number that are being picked up. But with restaurants, it's interesting. Restaurants and your weightlifting equipment and stuff like that, you know, we've seen our clients really pull out of all the stops to try and work with those people, and as long as they're communicating, and so that's one of the things I figured would tank immediately, and it just hasn't.
That's very interesting. Okay, that's good to hear. How about yourself, Sean?
I'm right on with Michael and Jeremy. Really not seeing anything outside of what they just mirrored. I mean, we've seen maybe an uptick a little bit in real niche type equipment. You know, we work with a lot of, you know, kind of out there different leasing companies, things like that are doing, yeah, you know, kind of more different industry type stuff than your typical fare. But by and large, I would agree with everything Jeremy and Mike just said.
Mm-hmm.
Okay, great. You know, and I think we covered quite a bit today of what's happening out there in the marketplace related to the industries and collections efforts and repossessions, and some fun stories as well as to what's happening out there. And I think at the end of the day, what we're taking away from this is that each situation is really unique. Communication is communication has to be strong, staying close to your customers, staying close to your the actual holder of the equipment. All those things, communication, monitoring, all that's become even more required than ever. With that, what I'll do is I'm going to wrap up the webinar, but I am going to ask everybody who is an attendant right now who is on to please stay on after I thank everybody. And because we have a few words that are going to be, we're going to have Darren, Lisi, and Chad Sluss, our new executive director, join us for a couple of minutes after this webinar is over. So if you could just stay on the line, that would be great. And before I get into that, I just want to thank each and every one of you gentlemen for joining us here today and spending the time with the NEFA members, Sean, Mike, and Jeremy. You know, thanks very much for your time and your insights. And, you know, we look forward to seeing you all again at some point in the future at one of the conferences, but great stuff today. Thank you.
Thanks for having us.
Thank you for.
Yep, thank you.
You're welcome.
You,
and with that,
always
you're welcome.
Pleasure.
And with that, what I'm going to do is just do a quick screen share and just thank our sponsors one more time. And I would like to thank today's sponsors one more time. IDS Asset Finance Technology, our platinum sponsor. Blockbox, the ultimate payment enforcement tool, Great American Insurance Group, and LeasePath. And with that, what I will do is I will turn this over to Darren, who has a few words to say. Thanks for being here today, Darren, and please go ahead.
You bet. Can you hear me okay?
Absolutely.
All right, good. Thanks, Mike. And yeah, great session. A lot of good takeaways. So thank you, Mike and Jeremy and Sean and Mike for that. Appreciate that. Great session. Just want to take this opportunity on behalf of NEFA and the board of directors to thank you, Mike Taglia, for your time and your service to NEFA. We appreciate all the hard work you put in the last couple of years. We look forward to continuing to see you at conferences, but over the last couple of years, you've spent a lot of time keeping NEFA in good shape, and this year especially, quite a memorable one that it was, right? We talked a lot throughout the year and appreciated really getting a chance to get to know you on a personal basis as a friend, Mike, and really thank you for leading us through a kind of a treacherous year, if you will, for as far as what happened on the outside. As far as on the inside, NEFA is still in a very strong position and a great, very much poised for growth going forward. And thank you for your leadership on that and bringing the new website up. We're very excited about that and all the functionality that can bring going forward. But just really want to thank you for your time and your energy and wish you all the best. We will be seeing you more in the future, but thank you on behalf of all of us at NEFA and the board for your time, and wish you the best back with the publishing company. So
Thanks very much, Darren. I have to tell you, it's been a real pleasure. And I know that Chad has a few words to say, but I was just going to say a couple of things if I can. Thanks very much for the recognition. I really do appreciate that, Darren. You've been a tremendous help to me throughout this entire year and the board of directors and such. But if I can just take a moment just to say a few things, and I know that Chad's going to say a few things as well. I'd like to thank the entire NEFA membership, to be honest with you, for the opportunity to serve as NEFA's executive director for the last 2 years. It's truly been my honor to do this. Over the past 2 years, I've had the opportunity to spend time with more of the members than I've ever imagined, both on the phone, email, at conferences, wherever it may have been. And I've gotten to know so many people and cemented so many relationships, and both on the personal and the professional side. And there's nothing that's giving me more joy actually than to actually help the members when they reached out when they needed something. I'd also really like to thank the 2 boards of directors that I worked with over the past 2 years. The board of directors are truly a very special group, and I think that they should be recognized in a lot of ways, because what they do is they volunteer their time. They graciously volunteer their time, in some cases a tremendous amount of it, for the benefit of NEFA and its members. And I think that the board should be applauded for anybody who gets on the board, anybody who takes on the role of trying to move NEFA to the next level and step forward and actually put in their own time to do that should really be recognized. And I'd like to thank them for all their support and help throughout the time, because I could not have experienced any success on my own. It took a lot of people, and it took the board of directors, 2 boards of directors. I'd like to thank Darren, who's on today. And I know that Mark Keatman couldn't be here today, but I'd like to thank Mark as well, because these are the 2 presidents that I served with during my tenure here. And I couldn't ask for 2 better partners to be a part of this with me. I'd also like to thank, if I can take just another minute or so, Blair Dawson and Patty McDevitt, who have been working very hard with me at NEFA for the past 2 years. Blair started in January of this year, and Patty started about a year earlier than that. And their hard work and dedication to the success of NEFA and its members is unquestionable. They've done a tremendous job, and I know that they'll certainly continue to do the same thing and to serve the membership as well as they've always have, if not even better, under Chad's leadership. And then finally, I'd like to just thank Chad. I had, for the opportunity today, to be able to address the membership briefly. And also, I've had the opportunity to work with Chad for the past few weeks during the transition. And I have to tell you that he's jumped in head first, and he has just come right into this opportunity with a very strong, positive attitude, great enthusiasm. And he brings a tremendous amount of experience that he's going to bring NEFA to the next level as well and really get us there quickly. And he happens to be a great guy as well. So he's a pleasure to work with every single day. So again, I just wanted to take that moment just to thank everybody, thank the members, thank the boards, thank all the volunteers that I've worked with, thank the team at NEFA, thank Chad and welcome him and wish him the best of luck in his new position. And with that, I'm just going to say, everyone, please stay in touch. I'll be around. I'm not going to disappear or anything like that, but thank you for everything, this opportunity, and be safe and healthy out there. And with that, Chad, I think you wanted to say a few words.
Yeah, I'll be very brief. So thanks, Mike. The last couple of weeks has been a pleasure working with you, and we're going to see each other early next week. I'm making a trip out to Philadelphia to meet with the team and do a little final transitioning with Mike and some files. But Mike, we're going to present you with a nice little parting gift when we see you on Monday. We're taking you to lunch. We're going to have that glass of wine that we talked about, so to celebrate your next steps with your publishing company. And in any event, we're going to pass that gift along to you in person. So we couldn't really ship it to you, and we thought we would just do it in person next week. So we'll have a little gift for you next week. And I echo what Darren said. Really thank you for your efforts, albeit I've just worked with you for a few weeks, but you're a pleasure to work with, and look forward to being part of the team with you on the Newsline magazine. So with that, I didn't want to take any more time because I know we're up against the deadline with the end of the webinar. But again, thank you so much.
Thank you, Chad. Thanks, everybody. And I look forward to seeing you next week, Chad. And actually, I know we probably can't shake hands, but we'll bump elbows or do something like that. And we'll do something like that. But it's my pleasure. And again, thank you, everybody. I look forward to seeing everybody in the future, and have a great day, everybody. Thank you.
Thanks,
Thank you.
everyone.